welcome to Colitco News Network. And we're back once again with what I think is going to be a really exciting conversation today. I'm Rachel, and joining us today is the Executive Director of Askari Metals Limited. That's ticker code AS2. And that's a company that has been making some very deliberate and impressive moves across the African continent. Mr. Gino D'Anna, thank you so much for being here with us today. It's great to have you with us.
Thank you, Rachel. It's great to be here. It's an exciting time for Askari Metals. We have been busy focused on building our portfolio of assets, high quality exploration assets actually across Africa. And I think it is really starting to resonate with our shareholders, the strength of the opportunities that we do have in front of us. The flagship asset there at Nejo in Ethiopia, as well as the critical minerals upside emerging at OIS. We believe the company is well positioned for meaningful progress and continued momentum as well. But just as important as that, we have been working very hard behind the scenes to simplify the business as well, strengthen our balance sheet, make sure that we are in the right position to take advantage of the opportunities that we've got and execute with discipline. So I am looking forward to discussing this with you today, giving you an update on what we've achieved so far and why we believe that Askari is entering quite an impressive period of growth as well.
Excellent. Thank you so much. Now, I think that really sets the scene nicely for our audience today. So, Mr. D'Anna, let's get straight into it. For anyone who has tuned in today, who hasn't come across Askari Metals before, how would you describe the company? And more importantly, what do you genuinely think sets it apart in what is a very competitive exploration landscape right now?
So Askari Metals is an African-focused exploration company with a very clear strategy. We are building a portfolio of high-impact projects across two resource themes, which are very strong and certainly resonate with the market, that being gold and copper in Ethiopia and critical minerals in Namibia. What makes the company stand out, though, is that we're not a one-asset, one-commodity story. We have exposure to multiple discovery opportunities across the jurisdictions that are highly prospective and increasingly relevant in today's market. At our Nejo project in Ethiopia, we have what we believe is a genuinely exciting gold and copper opportunity in a major mineralised corridor alongside some very significant existing deposits and mines, with one due to come on stream very shortly. But also carrying on the same theme in Namibia at the OIS project, we're seeing strong potential across a suite of critical minerals, including tin, lithium, tantalum, rubidium, and caesium, which gives us exposure to some very important long-term global supply themes. And I think one of the things that we've been seeing quite repetitively or quite continuously just in recent times is how important these critical minerals are to countries and why they're entering those strategic lists of critical importance as well. But I think what genuinely sets Askari apart, in my view, is the combination of asset quality, diversified upside, and disciplined execution. So we have been working hard to position the company with a clean balance sheet, a focused technical strategy, and a pipeline of meaningful catalysts. So what it means for an investor looking at Askari today, they're looking at a company with multiple shots on goal, strong leverage to both precious and critical minerals, and a very clear pathway to value creation through bona fide exploration success.
That's really interesting and so important. I think that context alone gives our viewers a very clear sense of the opportunity we are talking about here. Now, let's go to Ethiopia. That's where I want to spend some time first. You mentioned the Nejo project, your flagship gold and copper project in Ethiopia. Now, that sits in a neighborhood that most exploration companies can only dream about. The 1.7 million ounce Tulu Kapi mine on your boundary and the 3.4 million ounce Kumuk mine along strike. Now, for investors trying to frame the scale of the opportunity here, what does that geological setting actually tell us about Nejo's potential?
So that geological setting is exactly why we believe Nejo has the potential to become a very important project for Askari. So when you're positioned directly alongside 1.7 million ounce gold mine at Tulu Kapi, along strike of the 3.4 million ounce gold system at Kurtamuk, it tells you one very important thing straight away. You're operating in a fertile and proven mineral belt capable of hosting significant deposits. For us, that doesn't not guarantee success, but it absolutely de-risks the geological concept. It means Nejo is not an isolated theory or a greenfields asset in an untested location. We're in the right rocks, we're in the right geological setting, right structural setting, in a district that's already demonstrated the ability to produce major gold systems. And that's a really powerful starting point for any exploration company. But what makes Nejo particularly exciting is that we're not just talking about a regional potential in abstract terms. We have already identified multiple priority targets across a large strike corridor, and those targets sit within the same broader mineralised architecture that hosts these neighbouring deposits. So again, from an investor's perspective, the setting tells us that the scale and the potential is real, that the exploration program that is being pursued by the company is in a location that has supported meaningful discoveries in the past as well. But ultimately, in exploration, the location matters enormously. In Nejo's case, being surrounded by large established mineral systems gives us confidence that we're exploring a project with the right ingredients. It's got the right address. We believe it's got the right potential. But it's not just around the location. The asset itself has seen significant exploration undertaken in the past. So we've got an asset which has got multiple exploration drill holes already completed, which has shown a very shallow high-grade gold system, as well as a copper system up in the north. But it's now a concept for Askari to be able to step in, validate those historical results, and really build upon that success of previous exploration.
Absolutely. And I think that's a really important point for investors to absorb. And I think it speaks to just how strategically this ground has been positioned. And from what I understand, the team has been doing some very serious technical work to build on that foundation.
Absolutely. And it is been really important for Askari and for the company to take the significance of the historical and fragmented historical exploration information and really put it together in a coherent exploration model that we can actually use to pinpoint our exploration designs and drill with confidence. So a project like Nejo, where there has been historical reporting and historical work completed over time, the value isn't just in having the data, it's being able to consolidate it, validate it, and interpret that data properly, so that then we can guide our own decision making in a much more targeted way. We've gone through a process of data compilation and digitization, and that process was established because we needed a much clearer picture of the structural architecture, those mineralised trends, and as well the priority drill targets across the project. So by bringing that historical drilling together, bringing that surface sampling, the mapping, the trenching, and the other technical data sets into a modern digital framework, our team's been able to identify those areas where geological indicators were lining up most strongly. That's what's allowed us to define those drill-ready targets across that 9-kilometre Guji corridor. So that includes Guji, Contour 1 and Contour 2 targets. And that structural trend runs directly along strike as an extension of that Tulakapi mine mineralisation as well. But that's only just one of the areas that sort of gathered our attention and gained significant momentum. Directly along to the west, we've also got that Gudea trend as well. And Gudea, that trend has roughly 10 kilometres of mineralised strike as well. So from an investor's perspective, that matters because it significantly improves the quality of the first pass drill programs. Rather than drilling broad concepts, we're now testing targets that have been ranked and refined through a disciplined technical approach. That helps reduce wasted meters. Obviously, it improves capital efficiency. It increases the likelihood that the early drilling will deliver meaningful geological information as well. So I suppose in simple terms, the work that the team's been doing in the past, the digitisation program, it's established Nejo not just as a prospective theory, but it's technically advanced, to the point where we can move into drilling with a far stronger level of confidence around where we are targeting and why. And for an exploration company such as Askari, that's a kind of technical groundwork that really is critical because it lays the foundation for more effective drilling and ultimately better discovery outcomes as well.
So there is a very solid technical base underpinning everything that comes next. And what comes next, of course, is the part that every exploration investor is really waiting for.
Yeah, so it is absolutely key, right? These drill programs that we're looking to roll out in the near term. First phase is about 5,000 meters, but it's part of a broader exploration stream of up to 20,000 meters of drilling. But in running tandem with the drilling, we're looking obviously at trenching some of those other less advanced, less mature targets, that we can continue to build that pipeline of drilling targets and have greater degrees of confidence around the exploration and the outcomes as well. So one of the key things for an investor to understand is that the programs have been designed to generate value in stages, with each milestone progressively de-risking the project and sharpening the scale of the opportunity at Nejo. So the first major milestone is obviously the commencement of drilling, because that marks the transition from a highly encouraging technical model into an active field validation. And once the rig starts to turn, that's when the story really begins to move from theory to evidence and then outcomes. Because the next milestone from there is the initial assay results, and those results will tell us whether the geological model is translating into mineralisation in the way that we're expecting. But in a maiden program such as this, early indications and intersections matter not just for grade, but confirming the structure, the continuity, the broader fertility of the system as well. So if those first holes validate what we've seen in the data and the targeting work, then obviously we've materially increased the confidence and we can start to progress far quicker and knowing with a greater degree of confidence what those results will look like as well. Now, beyond that, investors should be watching for repeatability across multiple targets. So we're not just testing a single isolated prospect here. We're drilling across Guji, Comto 1, Comto 2. In aggregation, as I mentioned, that makes up more than 9 kilometres of a structural strike corridor, and it still remains open in both directions. So success at one target has the potential to elevate the broader system and reinforce a view that it could be a much larger opportunity than just a one-off result. Finally, one of the most important value markers for shareholders and investors looking into Askari is whether the early results justify moving from that maiden 5,000 metre campaign into the much larger phased program of up to 20,000 metres over time. And that's really where the bigger picture will start to take shape. So the key milestones are drilling commencement, first assays, confirmation of that geological model, evidence of continuity across those targets on that same structural strike, and the potential to scale the program progressively and aggressively, I should say, from there. And if all those pieces do come together, then investors could be looking at the emergence of a high quality, high impact gold and exploration story.
And if we look at the drill-ready targets across that continuous 9-kilometre strike corridor at Guji, Comto 1 and Comto 2, the maiden program of up to 5,000 metres and a phased strategy extending well beyond 20,000 metres over time. Now that is a serious exploration pipeline. What are the key value milestones investors should be watching out for as this program unfolds?
Yeah, I think certainly from a news flow perspective and the catalyst and those milestones, those drivers, and it goes back to what I was saying earlier, looking at a phased approach. And we're not phasing the drilling and exploration because we are concerned by what the data is showing us. It's not that at all. It's that we are taking a very disciplined approach to our exploration strategy. So focusing on that Guji trend and those 3 targets, Guji, Comto 1, Comto 2 initially, we're going to be drilling from areas of known information, known intersections, so we can validate those historical holes. Once we've got that information, once we're able to report those results in compliance with current industry standards, then we're able to step out and actually enact fence line drill holes and start to put some geometry around the targets and ultimately build ourselves up to that declaration of a maiden resource. And then it becomes about drilling in between the prospects and joining those up across that 9 kilometres of strike. As I mentioned earlier, looking at some of the other targets and some of those less mature targets, doing some extensional trenching and some infill trenching will help to take those up and graduate those into high confidence, robust drill targets. And so that's where that 20,000 meters really comes into place. So it's about utilizing the information that we've got, understanding the targeting work that's been done in the field to date, understanding how we want to phase in our exploration and what other streams of exploration we're going to implement as well. That's what investors have to look forward to. And on the basis that we're able to successfully execute our strategy, the program will be completed and we'll see successful outcomes result from that. And that'll really start to be the turning point for not just the company, but also for the project, as I mentioned, in terms of underscoring that scale and potential of that mineralised system, particularly given our location.
Absolutely, and those are exactly the kinds of milestones that can genuinely move the needle for a company at this stage. Now, equally important to the exploration story is the financial platform Askari has built to execute all of this. What can you tell us about that?
Yeah, so I mean, one of the things that we did early in this year was we paid out all of the company debt. So all those convertible notes and those redeemable notes, we paid those out. Practically, it gives every junior explorer something that they want, but not every company can achieve, and ultimately that's flexibility. By making the company debt-free and clearing out those outstanding loans, we put Askari in a much cleaner, more stable position operationally and strategically. It means that management can stay focused on advancing the assets and allocating capital to exploration and value creation rather than dealing with legacy financial structures or the risk of ongoing dilution. It's really important in this sector because balance sheet clarity matters. We're a small exploration company. Shareholders and investors will scrutinize the balance sheet. And so that was something that really we had to address in the short term. And so by removing the overhang, we believe investors will now have a much clearer line of sight to the underlying value of the project and the work that we're undertaking, not just across Ethiopia, but also work that we're doing in Namibia. Now, from a capital allocation point of view as well, it means that we can be far more disciplined. So we now are able to direct more funds to where value is likely to be created, and that's obviously in exploration, whether it's drilling at Nejo or advancing the critical minerals work in OIS, or supporting technical programs that we need to generate the next round of catalysts. But just as importantly, it allows us to approach any future funding from the position of a greater strength and a much clearer, cleaner corporate platform behind us as well. It means that we're not rushing to address any financial obligations. It's the company's able to take a more diligent, more timely approach to the way that we want to finance the company and who we actually want to bring onto that register as well, which is equally important. So in simple terms, being debt-free, it gives Askari a cleaner platform, a stronger credibility and a greater operational freedom at the right time. We are moving into a very active period for the company, and this structure it positions us far better to pursue that growth in a way that's disciplined, it's strategic, it's aligned with shareholder interests, and ultimately it's straightforward and very easy to understand.
Well, it's very important to note that Askari did enter 2026 completely debt-free after repaying all the outstanding convertible and redeemable notes, as you mentioned. Now, no overhang, clean register, no dilution risk from note conversions. Now, in the current environment for junior explorers, that is a genuinely significant achievement. But what does it mean practically for how the company is able to operate and allocate capital from here?
Yeah, I mean, so importantly, what it means for us is that we can look to put the funding into exploration and developing the assets, our portfolio of assets across Africa. We don't have to have one mind on what obligations we've got, whether it be interest payments or having debt covenants in place. We don't need to be stressed or stress the business, I should say, with having those thought processes run concurrent, because they can very much quickly cloud the judgment of the operators, it can cloud how it is that you approach your exploration portfolio, your assets, and your programs. So having that taken away, it means that we can be a far more straightforward, cleaner operational company and be the explorer that we should be, which is an aggressive company that's got the right assets and is able to execute in a diligent fashion, but is also able to maximize the amount of money that gets allocated to exploration, as opposed to having to worry about having let's call it a mudded corporate platform that needs attention or requires constant communication. It just takes away the ambiguity of the company, and it just means that we are moving forward in a much more streamlined, cleaner position.
Absolutely. Well, a clean slate going into what looks like a very busy and newsworthy period for the company. Well, now I want to make sure we give the Namibia story the attention it deserves, because there's a very compelling critical minerals narrative building in the Weiss project. What can you tell us about that?
Certainly, what we are seeing in Weiss is genuinely significant. I do think it has the potential to be unappreciated in terms of value recognition when compared to Ethiopia, but we're seeing growing momentum there. Again, Weiss is very well strategically located. It sits right next door to an operating tin mine, and it's less than 230 kilometres from the deepwater port of Walvis Bay on sealed road. So the project, from that perspective, infrastructure-wise, having an operator right next door certainly sets us apart from many other projects that are across Africa or other jurisdictions, in fact. But when you look at the results that are coming out of the project, the scale and the consistency of the mineralisation across the multiple critical minerals targets is very encouraging. So we're not just seeing isolated occurrence, we're seeing broad mineralised pegmatite systems with meaningful strike. Looking at DP in particular, you've got more than 700 metre corridor. OP, you've got more than 2 kilometres of strike. At K9, you've got over 1 kilometre of strike. So that immediately tells us that we're dealing with a system that is scalable rather than small, discrete targets. Importantly, and this is one of the points that I made just a moment ago, it sits in the same geological corridor as the operating Weiss tin mine, which again, it reinforces that fertile setting. Just like what we discussed at Nejo, being in the right rocks, in the right address, materially strengthens the exploration thesis from day one. But what really differentiates Weiss, though, is that commodity mix. So we're seeing exposure to tin, lithium, tantalum, rubidium, and caesium, all within the same system. It gives us leverage not just to one market, but to a suite of critical minerals that's increasingly important across global supply chains. So from an investor's perspective, that diversification is very powerful, particularly given the growing strategic focus on securing supply outside of traditional sources. And that's something that we've seen governments take big action to try and address those bottlenecks. So in terms of whether it's unappreciated, I think the market has naturally been very focused on Nejo because it's the immediate drill catalyst there and the scale of that copper gold narrative as well. But certainly as we continue to build the data at Weiss and demonstrate continuity, scale, multi-commodity potential, we're looking at mobilising an RC rig there shortly as well to really follow on the success of the trenching campaign. I believe that it will lift that recognition of Weiss and the strategic value driver that it has within our portfolio. From an investor's perspective, and in really simple terms, Weiss is not just a supporting asset, though. It has a potential to become a very real standalone critical mineral story in its own right. And I think that's something that the market will actually start to get more appreciation for, and certainly as results start to come through.
That's very exciting to hear. Now, as you mentioned, the Weiss project has been delivering genuinely impressive trench results across tin, lithium, rubidium, caesium, and tantalum. Now, the main DP pegmatite extends 700 meters along strike and sits in the same geological corridor as Andrada Mining's operating Weiss tin mine next door. How significant is what Askari has been uncovering there, and do you think that it gets underappreciated relative to the Ethiopia story?
Yeah, well, I think what we've got to take away the analogy and sort of the similarity in what we have been doing from an exploration perspective and what's been done at the nearby Ois tin mine is that it's the same pegmatite system. So those same pegmatites that have been mined and explored at the Ois tin mine next door are extensions of what we've got on our project as well. And so what we're seeing, and one of the first boxes that you want to tick is, do you have scale of your target? And certainly the trenching results and the strike and the width of those pegmatite systems that we've uncovered, and bearing in mind that we've only trenched 4 targets to date, there's the multitude of other targets across the 380 square kilometres of tenure that we've got, but we're seeing scale in these targets. We're seeing consistency in the mineralisation. So whilst it might be unappreciated relative to Nejo because the thematic for gold and copper might be somewhat stronger or might be more attractive and interesting for the investor, there is certainly a very strategic value driver at Ois. And it is something that the company is very focused on developing in the near term, because I think ultimately what that's going to lead to is a good consolidation opportunity for Askari across that Cape Cross Ois pegmatite belt. And that's something that the company ultimately was attracted to in the very first instance when we initially invested in Ois and in Namibia. And it's something that the company hasn't deviated from either. So for an investor, in simple terms, as we start to mobilise the drill rig to Ois, and as we start to feed through more information, more results, build to that critical position and that point of resource definition, I think the value shift and that value recognition will certainly be realised.
And that is a really valuable way to frame both projects for investors. And it's clear there are multiple genuine value drivers within this company.
There are indeed there is, and that's a really good point as well. I mean, we're not just looking at projects in isolation. We've spent considerable time acquiring the portfolio of assets, and we know that we've got the right projects. We've spent a lot of time in the background cleaning up that corporate structure and streamlining the financing perspective and positioning of the company, cleaning that balance sheet. So all of these things really do culminate in this transformation that Askari is going to be undertaking, and that's what investors have to look forward to. So the story is only just starting to unfold now. And those value drivers will start to become very apparent for shareholders and the broader investment community as we hit those milestones and as we keep on ticking off the boxes in terms of moving forward with the assets and with exploration.
And Mr. D'Anna, in its latest update announcement, Askari revealed that it's using in-house LIBS technology and pellet press equipment on site at Ois and applying satellite remote sensing and hyperspectral analysis to identify buried pegmatites at EPL 7626 before any physical work begins. Now, how does that translate into tangible benefits for shareholders in terms of speed, cost, and outcomes?
Yeah, so I think what it really boils down to is its efficiency and accuracy. And both of those translate directly into better outcomes for shareholders. By using our in-house LIBS technology and the pellet press equipment on site, we're able to get near real-time geochemical insights as we sample and assess the pegmatite. So instead of waiting weeks for external lab results, we can rapidly understand the mineral composition of the rocks that we're working on. And importantly, we can adjust our field programs to suit. So that accelerates not only our decision making, right, but it also helps us to prioritize those prospective zones, and it ultimately allows us to deploy the capital in a far more efficient manner. So the same logic that we've utilized in the past, it's also applying to the remote sensing and the hyperspectral work that we're undertaking, not just at 7626, but also at the other licenses as well. So rather than starting with a broad ground-based exploration strategy across a large area, which is not only time consuming, it's also really costly, we're using advanced data to identify and rank potential pegmatite targets before we even step into the field. And that means that when we do mobilize our teams into the field, we're working with a more refined information and data set, and we're actually working from a targeted point as opposed to looking and executing just on a very broad stroked brush grid system. So from a shareholder's perspective, the benefits are quite clear. You get faster turnaround because we're shortening the cycle between data collection and interpretation and result. Lower exploration costs because we're reducing unnecessary work owing to the targeting programs that we're doing using the hyperspectral data. But most important than all of that is that we're getting high quality outcomes because decisions are guided more by immediate and detailed technical information as opposed to just doing an off-the-shelf exploration campaign, for example. So really in a sector where capital efficiency is critical, given that we're at the junior end of the market, these technologies allow us to do more with every dollar spent, but we can also increase the probability that our exploration programs themselves will generate meaningful results. And that combination of speed, cost discipline, technical precision, that's something that gives us a real competitive advantage at OIS. But it's not just at OIS, we're also doing the same thing at Nejo. So it's something that we're implementing across the entirety of the company's projects and portfolio. And that really comes back to our disciplined approach and having diligence in terms of how we're executing those campaigns and how we're designing them and ultimately how we're spending that money, all aimed at generating the right results.
And that's absolutely what people want to hear. More ground covered, faster turnaround and lower cost. That kind of capital discipline is something investors in this sector really do pay attention to.
Absolutely. And it's, I mean, even from my perspective, I invest in a lot of companies as well. And that's one of the things that I look for is how efficient are they at spending the money and are they actually gearing themselves up and doing the right thing, doing the groundwork to make sure that they've got efficiencies and targeting. And that's the same approach that Askari takes. And I think that's a really important point to make is that the company should be run like that, and we're proud of the way that we've been performing and what work we've been achieving as well.
And if we take a closer look, the critical minerals theme is one of the dominant investment narratives globally right now. Rubidium is classified as critical by the US, Japan, and New Zealand, with essentially no published production outside of China. Caesium demand is growing. Tantalum is fundamental to the electronics supply chain. Gold and copper are both near record highs. Now, Askari has exposure across all of these. How do you think about the macro background and what that means for the long-term value of this portfolio?
So we're certainly operating in what I would like to describe a very supportive and increasingly strategic macro environment. Excuse me. I think it's a really important tailwind for the portfolio that we've built as well. On the critical mineral side, there is a clear and accelerating global focus on security of supply, and we've seen that. Countries are becoming much more aware of the risks associated with concentrated production, particularly for minerals like rubidium, caesium, and tantalum, where their supply chains are relatively narrow. And that is driving policy support, investment as well, and ultimately demand for new sources of these materials, especially from jurisdictions outside of traditional suppliers. So you mentioned China. There's certainly been a dominating factor and a dominating force in the production of those critical minerals. So globally, we're seeing this transition or this shift away from reliance on those traditional suppliers. And so it's a very important time for the company to be exploring and developing this asset. But at the same time, we're also seeing this energy transition and electrification themes, and they continue to underpin that strong long-term demand for minerals like lithium and tantalum. So tin remains an essential part of electronics and soldering. Tin prices are at record high. And so ultimately, it's kind of the coming together of all of the stars aligning. So when you do look at our OIS project, we're not just exposed to one commodity cycle, we have exposure to a basket of critical minerals that they're all tied into long-term structural demand trends. On the other side of the portfolio, gold and copper provides a different but equally compelling dynamic. Gold continues to benefit from its role as a store of value in uncertain markets, while copper is fundamentally tied to global infrastructure, also electrification and economic growth. So both commodities, as you've mentioned, they're trading at near historically strong levels. More importantly, though, the long-term demand outlook for copper particularly remains very robust. So what I like to say to an investor is that when you think about our portfolio as a whole, it's really about balance and leverage. We've got exposure to near-term exploration catalysts at Nejo, backed by strong gold and copper fundamentals, alongside longer-term strategic critical mineral stories at OIS that aligns with those global supply chain priorities. And ultimately, personally, I think the combination positions Askari in a very interesting way. We're not reliant on single commodity or single macro theme. We're leveraged to multiple high conviction global trends, all of which have strong underlying demand drivers. And so as we continue to advance both projects, we believe the macro backdrop will not only support the technical work that we're doing, it'll also help to underpin long-term value for our shareholders as well.
Mr. D'Anna, that's a really thoughtful perspective on where these markets are heading and what that could mean for a company like Askari. Now, I do want to address something that's always front of mind for investors in this space, and that's the practical question of funding.
Yes, so, you're absolutely right. You can't do all of these things without having the right funding in place. And so one of the things, and we've mentioned this already, is that clean company, no debt on the balance sheet. We're positioned to run successfully and have that maximum amount of money deployed into exploration and development of the assets. We've got a very supportive shareholder register as well. That's also very important when you think about the junior exploration sector. So I think ultimately a combination of the right assets in the portfolio, the right corporate structure, a supportive top 20 share register, it positions the company to be able to arrange the funding that's necessary to meet those objectives that the company stated and be able to deliver real value to its shareholders as well in doing so.
Now, the company has approximately $667,000 in cash and around $800,000 in listed securities available for sale and an undrawn working capital facility in place. A general meeting is being planned to approve a future capital raising. Now, Mr. D'Anna, can you give investors a straight and honest picture of how Askari funds the work program ahead across both Ethiopia and Namibia, and what underpins the board's confidence that the company can keep delivering?
The key message for investors is that we have a clear and pragmatic funding strategy, and we are approaching it with discipline and realism. So as you mentioned, we currently have a combination of cash on hand, listed securities that can be liquidated, and an undrawn working capital facility. That gives us a base level of flexibility to continue advancing project work programs in the near term across both Nejo and OIS. Beyond that, we are being very deliberate in how we plan the next phase of funding. The general meeting we're preparing for is an important step, but because it allows us to secure the approvals needed to raise capital in a structured way, aligned with the next stage of exploration. Importantly, we're not raising capital in isolation. We are linking funding directly to value-generating activities, particularly drilling at Nejo and ongoing work at OIS. From a board perspective, confidence comes from a few factors. Firstly, we now have a clean balance sheet, which puts us in a stronger position to engage with the market and potential investors. Secondly, we have multiple active projects, each with genuine upside and clearly defined catalysts, which helps to support that investment case. And thirdly, we're maintaining a disciplined approach to capital allocation, ensuring that funds are directed to the areas most likely to deliver meaningful results. We're also recognise the importance of timing. Our strategy is to align funding with news flow and technical progress so that we're raising capital into strength rather than asking the market to fund early stage concepts without validation. So in really simple terms, the plan is to fund the business in stages, using a combination of existing resources and new capital while continuing to build momentum across both projects. The board's confidence is underpinned by the quality of the assets, the clarity of the strategy, and the fact that we're entering a period of multiple catalysts that we believe can support ongoing engagement with the market.
And Mr. D'Anna, we're coming to the end of our time together now. It has genuinely been one of the more informative conversations we have had on this program. Now, for an investor sitting at home right now who's considering AS2, what is the single most important thing you want them to understand about where this company is headed?
Thank you. If there is one thing I would want investors to understand, it's that Askari is at a genuine inflection point. We have spent a significant amount of time doing the groundwork, assembling high-quality assets, simplifying the business, strengthening the balance sheet, and building a clear technical strategy. What that means today is that we're no longer just defining opportunity. We're moving into a phase where we're actively targeting and unlocking it, really building on that value. At Nejo, we're stepping into a major drill program in a proven gold and copper belt, surrounded by multi-million ounce systems. That gives us real exposure to a potential discovery story with meaningful scale. At the same time at OIS, we're advancing a multi-commodity critical minerals system that aligns directly with long-term global demand trends. Importantly, this is not just a single asset story. We have multiple value drivers across different commodities and jurisdictions, each with its own catalysts. That diversification gives us both leverage to upside and a degree of resilience as a business. But equally, we are approaching the next phase with discipline. We have a clean capital structure, a focused strategy, and a clear pathway forward. And we are committed to deploying that capital in a way that is aligned with shareholder interests. In simple terms, investors looking at Askari today are looking at a company that has done the hard work to get into the position where we are. We're now entering a period where news flow, drilling activity, technical progress have the potential to drive meaningful value. So that's really the key message for us. We believe the next phase for Askari is about execution and delivery, and we're very focused on capitalizing on the opportunity that's in front of us.
And I really think that is such a powerful note to end on. Thank you so much for sharing that with our community today. Mr. Gino D'Anna, Executive Director of Askari Metals Limited, ASX AS2. It's been a genuine pleasure having you here on Colitco News Network. Now, for everyone watching at home, you can find out everything you need to know about Askari Metals at askarimetals.com. And as always, thank you for watching. Stay informed, and we'll see you back here on Colitco News Network very soon. Now, this interview is for informational purposes only and does not constitute financial advice. Please consult a licensed financial advisor before making any investment decisions.